Alright folks, it's your friendly neighborhood taxman here to talk about a question often asked by business owners like yourself. Should I be buying my car under the company or my personal name? So, before I answer this question, I first need to explain why people even ask this question. Most business owners believe that they can claim more tax deductions and get tax back by buying a car under their company name. I don't always agree with this, and it really depends on the situation. So do not buy a car in the company without consulting an accountant first. Let's talk about examples. If you're buying a Lamborghini in your business name, it's actually 9 out of 10 times a bad decision. If you're buying a ute in your business name, most of the time, it's a good decision. So let's talk about how car purchases affect the tax for a business. Generally, the taxes that are affected are the following. 1. Income tax. Do you receive a tax deduction so you can offset your profits and reduce the amount of tax you need to pay for the year? If you purchase a car and use it for business, you're only able to claim the business use portion as a tax deduction. I would explain this in more detail, but if the car is subject to FBT, then you can ignore the personal and business use portion. Cars are fixed assets for a business or an individual, so you have to claim it using depreciation. When you depreciate the car, you claim it over the useful life of the car, which is normally 8 years. One advantage of buying under a business is that you can use small business simplified tax rules, which allows business to claim 100% of the vehicle upfront, minus the personal use portion. So they don't need to claim the car over a number of years, which is also called depreciation. Number 2, GST. Since you are a business, you get to claim the 10% GST credit back from the ATO, but you also have to pay 10% GST on any car sales made in the business. When you purchase a car under your business, majority of the time you are running the business in the company, so the company will be registered for GST, but you personally won't be. So buying it in your name will result in you losing out the GST credit of 10%. Whereas buying the car in the business will give you the opportunity to claim the GST on the car, but only up to the car tax limit, which is normally $59,136. So the maximum GST you can claim is $5,376. However, it's only when you buy the car from a business or a dealer that you can claim GST, as they have GST on the sale of the car. Which brings me to the next point. It's kind of like a double-edged sword. If you purchase a car in the business and decide to sell it later, you'll have to pay 10% GST on the sale of the car as well. In this case, there is no limit, so if you purchase a car for $200,000 in the company and you can only claim GST of $5,376, and then you sell it later, but for $165,000, you'll have to pay GST of $15,000 to the ATO. It's not that great, is it? And lastly, let's talk about Fringe Benefits Tax. Fringe Benefits Tax, this is a 47% tax on the personal benefits received by employees and directors of the company and their family members. This tax is separate from income tax and thus is an extra tax the company is required to pay on top of the income tax. So, what does this mean? Basically, by buying a car through a company in an attempt to make a tax saving, this has resulted in the company paying FBT of 47% for personal use portion of the company car. In my honest opinion, FBT is never a good tax for the business owner. This is because the tax is usually at the highest tax rate of 47%. The only good thing about that 47% tax is it's only imposed on the personal use portion of the motor vehicle. The business portion is excluded from this tax. So let's just use an example, and I'm going to explain as basic as possible. Please note that the tax systems involved, such as income tax, GST, FBT, are a lot more complicated than how I explain it. I'm just doing this so it's easy for you to understand. Say an individual purchased a car for $50,000 and used it for business 50% of the time. In the scenario where you purchased a car in the individual name, you can claim the car over 8 years, but only the business portion of it. For example, $50,000 times 50% divided by 8 years equals $3,125 tax deduction a year. In the scenario of a company purchasing the car, you can claim the car immediately, but only the business portion of it. So $50,000 times 50% equals $25,000. However, if the car is subject to FBT in the company, you can claim $50,000, which is 100% of the car. If the car was worth $200,000 or $400,000, you can only claim up to the car tax limit for both the individual and the company, which is $59,136. Okay, now onto the GST. If the car was again $50,000 in your personal name, there is no GST to claim back. In your business name, there is a GST claim of 10%. So if you purchase a car from a dealer or a business, you get to claim $4,545. So let's bring back the Lamborghini example. If you purchase a Lamborghini for $400,000, you can only claim GST of $5,376. But when you sell the car, you'll have to pay 10% to the ATO. So sell the car for $330,000 means you have to pay GST of $30,000. Not really a good position to be in, right? Now, here's the FBT on the 50K car. So assume you purchased a $50,000 car in the business. Basically, the personal use portion of 50% is taxed at 47%. But it's not just the car value that's the benefit you're receiving for the car. You're also receiving the benefit of the running costs, repairs, insurances, and any other car expenses for the whole year. If you work out that the car depreciation and the expenses for the whole year is $30,000 in total, then you'll have to pay $30,000 times 50%, which is the personal use portion, times 47%, which is the tax rate, equals $7,050. Please note that this calculation is very simple. It's not really the way the FBT is calculated. There are a few more adjustments needed to be made, but it's just to show you how the idea works for FBT. The FBT can be very high, as you can see. There's a way around this, which is when the employee pays back the personal use portion to the company, but it's best to speak to an accountant about this method. It's called the employee contribution method. Here are a few common examples as a guide. If you're planning to buy a car at a price of $0 to $100,000 from a dealer and plan to keep the car for 3 years or more, then it's probably a good idea to buy it in the business. You can write off up to the car tax limit of $59,136 as income tax deduction immediately, and you can claim GST up to $5,376 in GST. However, you'll need to deal with the FBT tax and possibly use the employee contribution to minimize the FBT that you need to pay. Here's scenario 2. If you're buying a car for $0 to $50,000 from an individual, more than likely there will be no GST on the car purchase because you're buying it privately. If that's the case, it may not be worth buying it in the business, as you can not claim GST when you sell the car, and then when you do sell the car, you have to pay GST on it. Also, you'll need to deal with FBT, which is 47% tax. It's quite high. It may be a good idea to buy it in your personal name. Here's scenario 3. If you're buying a Lamborghini for $400,000, do yourself a favor and just buy it personally. If it's in the business, GST will be huge if you sell it. The Lambo is only income tax deductible up to the car tax limit of $59,136. FBT will be a big issue as well. It's just not worth it. Just buy it in your personal name. Here's a very common example for scenario 4. If you're buying a ute, truck, or van, there is a high chance it's considered an FBT exempt vehicle, which means there will be no FBT tax on the vehicle. You can claim a GST credit on the vehicle as well. There is also no car tax limit on these types of vehicles, so it's best to purchase this in a business or a company so you can claim 100% of the vehicle against your income. Okay, as you can see, it is very confusing. It's best to speak to an accountant like myself, but the first thing you need to consider are the following questions when you want to purchase a company car. Will the car be for private use or business use? At what portion will it be for private or business use? Does the car purchase include GST? What type of car is it? Sedan, ute, truck, or other? What is the business activity of the company? Who's the company car for? Where is the company car parked after work? Is it a FBT exempt motor vehicle? Does the employee require a company car? Are you planning to sell the car in the future? And if so, how much? All the questions that I just listed will impact whether you should buy in your personal name or the business. Find out all the answers of them and go speak to an accountant to save yourself the heartache and the headache if you have to pay too much tax later. If you found this helpful, don't forget to leave a like on this video and subscribe to the channel for more helpful tips for accounting or running your business. And if you have any questions or want me to cover any specific topic, leave a comment below. Thanks everyone, see you next time.